Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, July the 22nd, 2025. As you know, today is Tuesday, Gary's Market Forecaster, GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. Wave one is done. We moving lower. We broke to a new low. We broke below that 38.2% retracement level at 97.84. And we came down a little bit lower to the battle zone, and we bounced as we expected based on a weekly being oversold, a daily being oversold, and we expected this bounce to manifest. The question now, this wave two over now, or Mr. Tucson, we're going to have to go down a little bit further. I'm not convinced by this bounce to say that this is over, but at the moment, I'm not convinced that this little bit of rally is over yet where we're going to go lower. I still think we're going to probably grind a little bit higher, but we shall see. But it is an important level for us to keep an eye on. I do think more downside is more likely than we go breaking out. But remember, when you get a wave two correction at some point, whether it ends here, somewhere down here, or we ultimately get to where our destination is located, it's eventually going to reverse and go breaking out. That's the plan. So going to the charting platform, we can see that from this bounce, which we expected, where did we go first? Remember I drew this on the chart weeks ago when we talked about coming down and this started to bounce. I said the first area is going to be tough to break is going to be this zone, which was a former support. And then we had support. Then it turned to resistance, came lower into resistance again. So expectedly, when this started to bounce, our daily reversal on the software, we had a weekly starting to reverse. We expected the bounce. In the first place we had the crack would be this zone. So look and behold, we hit this level and we're pulling back. So we want to keep an eye on that recent low to this recent high. And this little green box is the area which we're interested in. Do we hold the 618786 zone on this retracement? Well, this is what I'm thinking. If this is not over yet, you typically would get a 618 type of retracement to then bounce to go on and make a new high. Well, guess what? If we use this low to that high with this higher low, then my extensions are going to be up near the Magic Fibo, which are also going to be in this other big resistance zone. So let's just run that real quick with the 3-point tool. So I'm going to take this 2-point tool off for the moment, and we'll run a 3-point tool to say, okay, what if this is the low? This is my current high, and we come down toward that 618 zone, which is right about in this area. Where does that put us? Right at this resistance zone slash 1618, right up at the Magic Fibo. So this is what I mean by, I don't think this rally is the end and we go breaking lower. It's possible, but I think we'll probably get support and then go push one more time. And this would be ideal. We get another little push up into this zone. Maybe we intersect this resistance zone and the Magic Fibo. Then we turn down and make new lows. That's more what I'm thinking. So be careful on this pullback. So euro dollar bouncing, pound dollar bouncing. If you're scalping and taking that bounce like you think it's going to go breaking out, it's possible if this breaks down, sure, those euro, pound, euro dollar, and pound dollar will continue to go higher. But if this finds support and we go up higher, then the euro and pound is going to retrace a little bit further, like we were discussing. Any questions? So run the 2.2. I know it's a lot of lines on here, but from that current high to low, you can see the 618786 zone. Oh, this was fixed to go a little bit higher earlier, but if you fix this now, exactly that 618786, this 9730 area to 9690 area should be where we should find some support. And if this holds this zone, then we're likely going to see it make a move toward this at least 100 up to maybe 101. That's kind of what we're talking about, 199 to 101. And now that we see this fall a little short of where we expected it, probably reverse, but I thought it would go more toward the top end of this where we hit here several times, test, 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 test. And we just went to the base of that. So that does change your extension slightly, but the same result is even if we went up a little higher and did the 3.2, it would move in the same area anyway. So this is why we put that on the chart. Whether you use Fibonacci extension relationship or you just simply go to a chart and look for support and resistance zones, it's all the same because they coincide with one another all the time. Not every time, but all the time, you will see a high frequency of that. So, do we probably get a little bit more downside? Wouldn't be shocked to go just a little bit lower. This starts at 97.30. We're at 97.70. So it's possible we could dip down just a little bit further. So that's kind of the plan. Do we dip a little further? Maybe, more likely. And then do we go bouncing? Well, the good news is if we don't hold this green box, which we can extend this way, if we don't hold this little green box, then we could go start targeting 96, 95, 70, probably continuation down to 94. And then that gets awfully close to the much bigger picture, which was the COVID low up to the current swing point high. We did break the 618 during this pullback, but that would set us up breaking the 786. So the reason I'm still more bearish than bullish longer term is because the rule is from the high to the low, you break the 618, you have about a 75% chance. So when we close below that zone, we had a 75% chance we're likely going to continue down here and a 70+% chance we're going to go down to this level, which the first 75% we should go around 85, 70 plus we'd go around 82, and that gets awfully close to our 80 target. Amen? So I'm more bearish than bullish longer term. Shorter term, I said I was bullish because I expected this to bounce because we saw the software setting up and we reached a support zone in which we could bounce off of, right? So go over to the software and we could see why we started to get somewhat bullish for the short term, that the daily was working on cycling up. And we got a PAI, red and blue made it, but the trend momentum, but the money flow here, the green line didn't quite make it all the way. And then the trend momentum one made it close enough. Red and blue trend, it's 3 out of 4, meaning you got 2 out of 3 on your PAI and the trend momentum one. Well, that's pretty much a cycle, right? Well, money flow was shy. And we saw last week that we had a weekly hook and a cross. Notice this right here. This is what we call a PAI hook and a trend momentum cross. So the hook and the cross states highest probability that daily cycle will finish before it's done. Well, this is the biggest angle of separation. When I get a PAI hook with slope and a trend momentum cross, I like to see a little angle of separation. Well, we had this hook in a slope and we got the green above the red, so that is a cross. Even though it's not the steepest of slope yet, I still relate that as a weekly PAI hook and a trend momentum cross. And as you well know, what does a weekly PAI hook and a trend momentum cross equal? It equals a daily cycling. Well, look at the daily cycle. Again, everybody looks like it's cycled, look like it's cycled. Well, that's perfect. It did what it needed to do. But no, money flow right there, that green line is a little bit shy. So what I anticipate will happen during this pullback, we're getting a slingshot down. It's going to turn into a slingshot up, and this little pullback will find some support in that 97.30 to 96.90 area. And then we'll end up slingshotting back up. I'm painting the Picasso software, and this will bounce and we'll go pushing higher into the cloud area. And again, this Magic Fibo is extending downward. So maybe we intersect the two and we reach that target, right? So be very careful that you think the dollar is done and this baby's just going to keep going lower. It is possible. That's why we like to use this 3.2 and you come back to this level and you come back to this zone, and I'll expand this out. I know there's a lot of lines on here, but I'll expand it really large so everyone at home can see without a doubt. From the swing point low to current swing point high, here's your support zone. It is the 618786 zone. Rinse and repeat. So is it possible this could drift a little bit lower? Would not be surprised to see it drift a little lower. We're already testing the 50% retracement off of that move. That's where we are now. And typically, you sometimes go a little bit deeper. I like to see the 618 retracement come into play, then bounce off of there. So this is part of that weekly PAI hook, daily cycle up. And right now, the money flow I just showed you didn't quite finish. So we're getting a daily slingshot down into a slingshot up. So I would expect that we may get a little bit more downside here, but then I'm looking for it to bounce. So that euro dollar that is bouncing at the moment while the dollar is pulling back, we'll go over that in a second. I'm going to look for that to stop bouncing as this comes down and bounces up. That euro dollar bouncing will come back down. Inverse relationship. So if this is the end of this move and we don't get another run up toward the Magic Fibo, bring this back down, here's the Magic Fibo line. So here I thought we had a very good chance to reach it. We didn't. And then we went lower. And now I think this is even a better chance to reach it, but it's possible we don't. The goal is for the dollar to keep going lower for now before it reverses and goes higher. But based on that weekly hook and a cross and a daily not really finishing the cycle completely, I still believe in the software and trust the software and the technical picture. Hey, it's still in tune. What does that mean? Well, Emil, it's in sync. I believe we're going to go from what we call this slingshot up, where the red and blue snap back toward green money flow. But why are we talking about a slingshot down into a slingshot up? Well, look where the red line is. It's already crossed below green money flow. So if we just engage without crossing, and then we'd call that engage, disengage. Not that it really matters. And in this case, it's called a slingshot down to a slingshot up. And I believe we're going to find support again at that 97.30 area to 96.90 area, which is what? From the low to the high, 618786 zone. And then we should bounce out of there to continue higher via, what would this software do? This is going to turn back up. And we're going to get this to start turning back up. Blue will turn back up. Green will turn back up. This will turn back up. Trend momentum 2 will keep pushing. And we'll get this three-wave move and then we'll look for another down move. That's kind of the plan, right? Everybody good so far? Well, if we don't hold this zone, this 9730/9690 area, if we don't hold that, then what does it say? We start closing below this green box, then we got a 75% chance we're going to 96, 70 plus we're going on to 95, and could continue down toward this 94. And the closer we get into 94, again, that's why I showed you this back over here. We start closing below this 94 area, which is that line, then we got our not only 75% chance we're coming down here and a 70 plus we're coming down here, but it sets the tone and it reconfirms the idea we're going lower, right? So I still think we're coming down here up and until price proves otherwise. No reason to believe, even though we dip and go a little higher, go up toward the Magic Fibo, then get rejected. Once we start closing below this 94.60, the writing's on the wall is that we already have it since it closed below this 98 zone that we're going down here. But if it continues where we get another lower high, lower low, and it takes out the 786, it reconfirms we're going down here and puts these percentages back in focus where we should go on to make a new low below the COVID low. And again, the 85.82 is awfully close to our target zone of about 80. Fair enough? All right, now let's flip the script. Well, what if this is the end? Because we came down from the COVID low to the high, we went into the 618,786 zone, and we're bouncing out, and that's the end of that wave two, and we are going breaking out to new highs. What's it going to take to prove that? Well, in order for us to flip the script and say, nope, we still have a higher percent chance we're going lower than we're going higher, we need to see price action prove itself, force price to prove itself, as I like to term it. And that is, we not only have to break above the Magic Fibo, we got to break above this 105, 107 zone. What is that? From the recent high to the low, that's the magical 618,786 zone. So this basically 105, 104.90 up to 107 and change, 105, 107 level. If we start closing above that, then it sets the tone. We're going to 112, 113. Well, what if we do that? Well, from the high to the current low, there's the 618,786 off of that move. And we start closing in this 112, 113. Now it says this wave two is over, and we're going up to 117, 120, etc. as we go higher. Fair enough? So before I take this bounce seriously, we got to get above the Magic Fibo to start. Then we have to take out this 105, 107. We take that out, then it's a strong inkling, and we could call this wave two over here. But that's a long way for us to go up here and break and close above before we can start focusing on what's the upside targets. All right, in the interim, short term, well, what can I do now immediately? I suspect we're going to get a little bit more downside as this is bouncing. We bounce, we get a retracement, and this looks like a nice little five wave up. 1, 2, 3, 4, 5. Now I'm looking for a little three wave collection. 1, 2, 3. Come down a little further. And then we get another little 1, 2, 3, 4, 5. Likely going to take us up near that Magic Fibo in this retracement zone, which will be the bigger three wave correction. Then we look for the down push. Amen? Any questions on that? So how much further do we expect this to go? Probably just into this 97.30 to 96.90 area. Basically the 618,786 zone. Right? See it? Just into that zone, so we're not talking too much more. We'll look at the software again, and we can see why. The daily's turning over, and we're starting to get a hook and a cross lower. So that means the 4-hour is working its way toward oversold. So this is what I'm looking for. We're almost there. The 4 hours finishing the cycle, and we got that all important support zone at 97.30 down to 96.90 area. So it's possible that once this PAI hooks here, this could be the end of that move, and we do go breaking out. So I'd be very careful on that euro bounce and the pound bounce at the moment, because I think we're at or near a bottom on this retracement from that first move, retracement, second move, basically looking for the A, B, C move after the big 5-wave aggressive move lower, looking for a 3-wave correction for yet another big push lower. Amen? So this is why we always go back to this chart. I don't think this is over. This is a massive question mark right now. Is this wave 2 bottom? In my humble opinion, no, it's not over. We're going lower. I've been saying it ever since we topped out here. We were likely coming down here. And over 3 years ago, when we brought this up, we said it would take multiple years for this thing to play out. Well, here we are from this point to here. We're well over 3+ years so far. And now, could we go a couple of more years to get down there? Sure. It certainly could take more time. But just remember, the bottom line is this wave 2, whether it is over here, extremely low probability it's over now, and a much higher probability we're going to go lower to finish it. But one thing to have in common is once that wave 2 is done, we will go break new highs. The question is this it? Is it going to come down further, or is it going to come down to our original target? No reason to believe we're not going to come into this zone. And remember when we showed you the high low and we break that 618-786 zone to the downside, which turns out to be this 94 area, we get below 94, then we have that 75% chance we go into 85, 70 plus we go into 82. And that, my friends, is right in the area of which we expected this to move initially. Got it? So that's why I'm watching this very closely, because this will set the tone. So if this is the end and we break down sooner, which I don't think it is, then we need to close below this support zone. If this is the much further down move we've been expecting, then we need to see this 94 taken out, which then sets the tone for our 85, 82. Right? That's all you need to do. Go to Magic Fibo on the chart, put these magical Fibo levels on the chart, and then have the magic software on your chart, and you're good to go. So in closing, expect the dollar to go a little bit lower, finish the cycle. My daily is going to do this what? It's going to go what we call a slingshot down to a slingshot up. We're going to make a higher low, higher high. We're going to grind into the Fibo area. If you use Ichimoku Cloud, we use it all, visual aids. And we got the Magic Fibo extending lower. So I'm looking for this lower high, lower low. But I don't think this is the lower high just yet before we get another lower low. I think we're going to get one more push into a lower high. Then we're going to get the lower low. And again, you'll see me actually continue this process. We get that lower high, lower low. We take out this 94 area. Then it reconfirms 75% chance we go into 85, 70 plus we go into 82. And that again is right in the zone we said 3+ years ago, where should we go? That was the destination. That's where that came from. All right? Beautifully so. Now, I was talking about the euro. What about the bounce? Well, we got a little bounce because the dollar's pulling back, the euro's giving us a bounce. It's pretty much in the same boat in an inverse relationship. Well, let's go back a few weeks ago. What did we do? Even a few months ago, back here in January, We talked about the euro bottoming right around this 101, 102 area. And then we talked about, well, we're going to go long and ride up to Magic Fibo. When it breaks and kind of comes back, we're then going to shoot for what? From that high to low. When we started closing above this 108.30 area, when this green candle body closed above, what did I tell you way back when? I even set this up weeks in advance. Hey, you see the euro close above 108.50? Then go long and shoot for 113.70, 115. What happened? We hit the two targets. Then we talked about another correction, and we used the high to the low there. And we said we were going to what? Even after this, I said we'd get a pullback. We use the high to the low. We'd go back toward that 1618 retracement, 618 retracement. Then we'd get a bounce. And then we would look for the next move up, which would continue toward this 118 area. Well, bear with me while I show you what that looked like. It's in the archives, but we did the same thing, Emil, beautifully. From the recent high, after we reached those targets, I said, be sure you take profit because we're due for another correction. And then we did what? We then broke above this 113.80 area. And I said, we're going to shoot for 116.50, 117.50 as we move toward that 118 target. Well, just like I called this one, I don't think this is a brand new one. It might be, but it's a low probability because I still think there's some more downside left. But if this is the case, then we could do the rinse and repeat. This low to that high. And we need to start closing above where? Just like the dollar index and inverse. Well, we need to close above this area. I'm going to leave it pink for the moment because I should expect it to be resistant. We start closing above, say, 117.80. Then we can start targeting 187 or 118.70, 119. Sure. But that's a big if. We need a green candle body to close above this zone. Then we can start targeting for another one. But I think what's going to happen here, it's going to go into this zone, find resistance, and push a little bit lower. That's what we're looking for. And how much lower do we go? Well, we have the same type of targets. We got a big support zone here. This is a support zone we originally drew here initially. We could find some support initially. And now we got the high to low, 618, 786 resistance zone. So what happens if this is the high, this is the low, and we get this lower high that comes up into the zone to test it? Then we could see we're right in this zone. Well, what if this is already the end and we don't go any higher? Then it's still in the zone, right? My big support zone, former battle zone, slash, and you say, well, this isn't touching the Magic Fibo yet. No, but this is still sloping upward. So if we take a few days to kind of chop and grind and chop and grind to get down here, this thing is moving upwards. Maybe we intersect the two. So I don't think this is the low to buy in which we're ready to go breaking out. I think it's going to do another push lower. Then we can look to buy somewhere around that 113, 112-ish level, and then buy the dip for that to go higher, like we did buying the dip around this 110 to reach the 118 level. And before that, we bought the dip down here at 101, and then the trade went at 108.30, went up to 117. 113, 114, reach that, pull back, reach the next. So what am I saying? We're going to get this again, but we're not there yet, in my humble opinion. Now, this is going to make another push lower. Then we can buy, and then we look to go long. So what is the ideal time to do that? Well, you can use the software, go to the euro dollar, and go to the software and say, when this daily finishes its down cycle. So right now the daily is pushing lower, it's engaging up. I expect it to disengage or go from a slingshot up to a slingshot down. This continue to push, this continue to push, and we get a lower high, lower low, and then I'm going to look to buy that dip right there. I'm going to buy that dip. Well, this is sloping upwards. We're expecting to get sucked and pulled into the cloud. And why do we think this is not finished? Look at the weekly. The weekly gave us that hook in the cross. Again, we didn't get steep slope and a lot of angle and separation, but green is below the red, and this was a hook, and that was a cross. Again, I prefer to see the PAI hook, trend momentum cross, slope, angle separation. Well, we got the PAI hook, we got the cross, green is below the red. There's just no angle and separation yet. So this is why I think we still got more downside while the weekly depressurizes to do what again? Slingshot higher. So I think this weekly is doing the same thing. It's depressurizing the slingshot higher. We're going to get a pullback a little bit lower, then we're going to go higher again. Amen? All righty. So this is why I'm expecting this daily is likely going to go up and maybe engage, disengage, or go from a slingshot up to a slingshot down. All I'm looking for is the trend momentum, PAI, to reach oversold. And whenever that happens, you get these triggers. So you can go to any time frame. It works on all time frames. When the monthly, weekly, no matter what time frame, we were deeply oversold, we got a trigger higher. We went to overbought, we got triggers lower. Over here, we didn't quite get all the way. It was close enough. Trigger higher, trigger lower, trigger higher, trigger lower. And again, most recently, low, oversold, trigger higher. And that was the one we bought. In fact, I have this trade running right here. We're up over 760 pips. And I haven't taken profit one yet. What? 700 pip move and you ain't even taking profits on this latest bounce? Well, in this demo account anyway, I'm still letting this run because I expect a lot more upside. And a lot of my other accounts, sure, I took profits, I pulled back, I took profits, I took again. So yeah, but this is just showing you I put this entry. Notice what I did with my stop loss. It is now above my entry. So if this thing goes plummeting down, this is what we call a position of authority. We're in a position of authority. Why am I leaving my stop loss only, 150 pips or so in the profit? Well, it's because I see this pullback zone, and I don't expect this to pull back quite that far, but I want to give it a little room as it's depressurizing. And yes, again, I painted the Picasso on this. I think this is going to go down and slingshot higher, and we're going to make a higher low, higher high. But this is what the software does. It puts your take profit 1, 2, 3, put your stop loss in here. When you reach take profit 1, it automatically moves your stop loss in the profit, or it's on-screen programming. I can manually just click on that red line, that's the stop loss, and move it deeper in the profit. And now you'll see we're up to 113 from a 109 entry. Now we got a good 400 plus pips of profit locked in. So it is on-screen program. I just like to give it room to breathe because I'm expecting this still to go up a few thousand more pips. That's the plan. And I'm just going to leave it in profit, but just down here by that swing point low to see that this latest push higher, we should stay above this swing point low. And if this is the beginning of a 1, 2, 3, 4 correction should not come below wave 2. So there's a lot of reasons why I choose these battle zone. It's a former resistance zone as well. We can see we struggled in this area for a very long time. Test, till we finally broke it, retested it as support, and we're going higher. So this is why the stop loss is sitting right there. I expect that this push, even as this goes up and pushes a little bit lower is the plan, then we're still going to make a higher low and not reach that stop loss. And then we'll go on to our take profits up here around 126, 134. And remember the sweet spot up here, we're looking for this ultimately go somewhere about 140 to 145 area. Right? That's the plan. How long have we talked about that? 3+ years ago, you go to the euro, you go to this big picture on the euro, and we talked about that for many moons. Actually, it's this one here with the Elliott wave on it. We talked about this being the move, And all this correction is this A going up to this B. Then we're going to come down in C. But we said when this reversal down here at 0.95, I said expect this to be a beautiful retracement into the sweet spot. And we're looking for like that 1618 type retracement, maybe as high as a 17786. But all this is this A going to the B, and then we're going to end up coming back down. Well, the dollar is giving us that correction in wave two. Then we go breaking out. This is part of the euro rallying, and when the dollar bottoms and reverses to go breaking out, this thing's going to be a lower high pushing to a lower low. That's the plan, long term. But when this reversal, and we're up thousands of pips on that move, which we discussed, and most recently off of this, we're up about 1,800 plus pips. So there's many ways to get those pips. Got it? And we expected even off of that latest little pullback, we were going to get a nice little push, and that's that trade I was showing you. Well, we got in off of the last little pullback, this move, and that's why I'm expecting this pullback to stay above that zone for us to be in profit, in which we can continuation move higher. So I believe this is 1, 2. We're working on this 3, 4, 5 ABC type of thing, which is still probably a few more years, but basically it's an A to B, lower high, into another push lower, right? All righty. But that's the mentality behind this. And the software, again, is just screaming the same thing. So what can I do with the software? I showed you this last week, show it every week. You go into the expert advisor properties, and it allows you to set your take profit, stop loss, take profit. You come down here, and all we want to do right in this area, all I want to do is buy a trigger long. Why a trigger long? Because I want this daily to get oversold. I want this PAI, red, blue, and green, to get oversold, and I want this trend momentum at 1 at least oversold. Like notice here, the trend momentum never made. Well, the trend momentum did, red and blue did, but money flow did not. There's no trigger. See it? You have to get the PAI and the trend momentum oversold to get a trigger higher, and they have to be overbought to get your trigger lower. Overbought, overbought, trigger lower. Well, this is not oversold because money flow is not there. Everything else looks good, but no cigar, no trigger. It's like magic. So you set this and say, I want to buy that trigger long. Yeah. So we're good to go. And then all we got to do is click this and say ready to trade. Now this thing will sit here for days. We said it last week, and of course I'm teaching off of this demo account, but I have it set in my real account, just waiting to enter. So it could sit here for days. This has been about a week or two, and this thing will go up, more than likely get a lower high, lower low. And then when this finally goes up, comes down, finishes the cycle, we get that trigger higher. We're going to get another one when it gets oversold. And this basically looking for this to go oversold, PAI to hook. We get our trigger long, and I'm going to buy that dip. All right? And the beauty of this is it'll sit in ready to trade mode for days. If it's on a weekly, it could be there for weeks, months. On a monthly, you could set it up and it'll sit there for months to years till that baby sets up. And it will not get you a trigger higher until you're oversold. That's the way it works. And it will not get a trigger lower until you're overbought. That's the beauty of this. I can set this now and just let it run day after day. Obviously, I can't close my trading platform and reopen it every day. Then I have to keep setting this back to ready to trade. And then the other thing is you don't let your computer go to sleep. So you type in here sleep, and you go up to your power, sleep, and battery settings. You click on that, and you want to go up into this sleep hibernation mode. And right here, you tell it never to go to sleep. If you're running this software and you want to keep your computer on for a trade like this that needs to be on, so what happens when the markets close Friday and they reopen on Sunday? That type of thing. It'll still stay in ready to trade mode. And you never let your computer go to sleep, because if your computer goes to sleep and this baby triggers to get in and it's asleep, it won't know that it's triggered because the computer's asleep and the platform is asleep. Got it? All righty. So there you have it. So when this sets up, I'm looking to buy the dip. I don't think this little bounce is that dip like I was showing you on our charting platform. I think it's going to end up with a lower high. And here's another trade I was just looking at, euro, the one we're talking about, continuing to go higher. So I do think we can get a deeper pullback, but I'm just going to let this baby continue to run till we reach take profit 1, take profit 2, and maybe we can get all the way to that 145 area for take profit 3. But I still think we're pretty solid to get take profit 1 and 2. And do we go up to 140, 145 is the plan? Maybe we stop at 140, but at least we'll get into this. And again, once this officially reaches this, it moves your stop loss into profit. What if I already have my stop loss into profit? Then it doesn't need to move it, right? It's not going to move it again if it's already in profit. But if you were still at risk by the time you hit take profit 1, then it automatically moves your stop loss into profit. How cool is that? So in closing, on the euro dollar, I do think this bounce is short-lived. So this is why I'm looking for this to go lower to buy the dip on this, and this is going to fizzle to go lower, and this will finish the cycle. This is what we're looking for, that this little pullback, little ABC pullback after a 5-wave up. We're looking for a little 3-wave correction followed by a bigger move higher in the longer term, but that's the plan. I don't even think this is wave 3 done yet. All right, you see the 1, 2, 3's way up here, so I'm looking to get probably toward that take profit 2 level, somewhere in that take profit 1-ish to maybe somewhere to take profit 2 to hit 3, then 4, then 5, and then is this the A, the B, the C? We'll see how that plays out. So whether you believe in Elliott wave or not, all it is GPS coordinates, turn by turn GPS coordinates where price is headed. And a big move is what? A up to B. And 3+ years ago, when this was at 0.95, I was like, man, this is an opportunity for us to go long and make thousands of pips over the coming years. 3 years in, up thousands of pips from 0.95, right there, 0.95, and we're sitting at 117. And we still got probably another 1,700-ish, 2,000-ish pips still to go, at least. So I'm looking for that retracement. On the big picture, go to a monthly chart, and all we're looking for is from all-time highs, which is up here in the 160s, use your 2.2, all-time highs, to this low, 0.95 low. We're looking for a 618, 786 retracement zone. My sweet spot is somewhere around that 140 to 145. So remember, we're never expecting this reversal for the euro to go breaking all-time highs. We're looking for a retracement toward at least 136, maybe pushing closer to the 170, 786 zone. That's where the 140 to 145 comes in. But what is this big picture looking like? This is just a retracement in the here before we come back lower. All right. So it's inverse of what we're looking at the dollar index. Pound dollar, same scenario. I'm not looking for this off the monthly to go breaking all-time highs. I'm looking for a roughly 50% to 618 retracement. My sweet spot for the pound is about 160 to 165, right? I don't think we're going to get up here and test this 170, which is a true 618. I think we're at least going to get a 0.5 up to a 618 retracement, where the euro is a 618 to 786, pounds a little bit less, 0.5 to 0.618, but the sweet spot is right around that 160 to 165 area. Fair enough? And that's some extensions in there. But as of late, this little bounce, I don't think is over. We got this correction, and I don't think that bounce is quite over. So we'll go down to the daily, and we see the same type of move. Well, I still think the pound from the recent high to low, we're bouncing at the moment, but we're already from the recent low, this low to that high, we closed below the 618 and the 786. So even though price is moving this way right now, we still have a 75% chance we're going to go visit 133. 70 plus, we're going to go visit that 132.60. And again, Magic Fibo is in the vicinity and it's still sloping upwards after that big, huge move up. We're retracing. I'm looking for a three-wave correction, then another big move. So higher probability we're going to make a new low, shooting for 133, 132.60 area, even though this is bouncing. So what do you need to do from here? That's your 2-point tool. And you use a 2-point tool from the recent high to this recent low. And you see my 618786 zone is up here, there, to here. So I don't think the pound is ready to go breaking out, which long term, yeah, I still think it's got thousands of pips to go. But I think this short term bounce is going to find resistance to push lower. Then we can look to buy. Fair enough? Then we can look to buy. So be careful on this bounce and look for a lower high, lower low. Then we can look to buy for this thing to go breaking out and continue with its targets 140, 160, moving higher toward that bigger move. Again, all that is off this monthly chart. Got to bring that into perspective. We're looking for the bigger move, and I know there's a lot of lines and you can't see anything, but from all-time high to the low, we're looking for this 158 to 170 zone to come into play. And like I said, my fine-tuned target's 160 to 165. And I said that 3 years ago when this was down at 1.03. I was like, man, this is an overshot to the downside. You need to be buying this long term for this thing to rally thousands and thousands and thousands of pips. But again, this isn't a reversal to go breaking new highs. It is simply a retracement before then we move lower. As our dollar dictates where those currencies are going, because our dollar is a part of that currency. And this, go back to the inverse of this, and you can see from the recent low to high, all we're looking for is a 618786 retracement for us then to go breaking out to some new highs above that 115. Will we break all-time highs? We shall see, but once this wave two, I'm expecting us to go somewhere into that 130 to 140 area. Maybe we can get really rambunctious in the coming years, and maybe we do go up to this 170 area, all-time high. But I'm not shooting that far just yet. That's a 165 or whatever it is. I'm shooting for this to potentially extend out there. But once this wave two is over, definitely looking to go back to these highs, break into the 130 to 140 zone, and we'll see how that plays out. All right. So let's do a bigger picture. Mr. Tucson, I'm going to remove a bunch of these because they're all over the place. And I can always draw them back. But from the monthly views, like, what are you expecting here? I'm going to look for these targets and let's see where they play out. Again, just take me a minute to remove some of these. Just do them a little bit faster. Remove, because it doesn't take long to put these in. And it's good practice for you to do it. And then take this, remove, and we're simply going to use a 3-point tool. And you go from the low up to the high, to the higher low, which we're expecting this to come down about 80, somewhere in that zone. So here's this box area where we're thinking it's going to go somewhere in this zone. And then you can see why this low to that high, we get that 618786 retracement zone we're looking for. And then we use a 3-point tool on that. And where would we at least go? 125. If this move to this move down, we get an equal measure, would be around 125. But typically you make a move toward the 1618, which puts us in the 140 to 150 area. So now you can see where that 130 to 140 area comes from: 618, 1448, 1272, and maybe we go a little bit higher towards that 150. This is the 1, 2, 3, 4, 5, or do we get an extended 3, 4, and then maybe the fifth wave pushes us up to an all-time high? Maybe. We'll talk about that later. But you get the point. That's where that comes from. So you say, well, Gary, when that wave 2 ends and we go up, where are we looking for the dollar to go to? 130 to 140 area. Maybe we get an extension to 150. And if that ends up being the 1, 2, 3 gets extended, that's fine. Then we get a 4 correction and a 5 up, and then maybe we do go to all-time highs. Got it? But I won't say once this is over and we start breaking out, we're without a doubt going to all-time high. Maybe not. We're at least going to go up into this zone. Amen? And for those of you that's been around a long time, remember when the euro and the pound, etc., were at their peaks. So we'll go back to this platform. When the euro was at its peak, sitting up here in the 160s, I said the euro would go down and break below parity. For years, I said it way in advance. Destination 1, we're going to go below parity. And it took a while. You know, when you think these big swings, you think, there's no way. Every time it pulls, it keeps going back up, but we kept getting lower highs and lower lows, and eventually we went below parity. Now all this is a correction and an A up to B, and we get a C down. And once this big C is down, is finished, then we can start talking about, let's go long the euro dollar again, because we're going to get another big move higher. But that's years away. In the short term, where we're likely to go, come over here to software. Again, I think this is going to engage, disengage, and turn back down as we make this 3-wave move, A, B, C. This gets oversold, this gets oversold, PAI hooks. I'm already set, ready to enter that trade, and I'm going to buy the dip. When I buy the dip, I'm going to be sure to take profits and be in a position of authority like I already am on this bigger move. We're in a position of authority. We're up 700 plus 777 tips, like the number, and my stop loss is in profit. So this thing could run indefinitely, and either it pips us out for profit or it continues to reach out targets and we make that many more pips. That's the plan. Let's finish up. Pound dollar is same thing in ditto. I do think it's going to end up fizzling, and this part of this retracement, then we're going to get a move down. But for now, I do look for way more upside. Like I said, when we're down here, thousands and thousands of pips ago, we're at 135, we're at 103. Do the math. Thousands of pips later, still think we're going to get a higher low, higher higher. There's more to come. But then what? A, B, C, we're going to come back down. Eventually, when we get up here, we'll look to go back short. As we were short here, now we're long, and then we're going to go short. All righty. Let's continue. What about the markets? What's going on with the markets? ES did exactly what we wanted it to do. Remember when we were in this zone? I said this weeks ago that this would climb up toward its 1448 level, and we were looking for this to start moving toward those targets. And sure enough, expected this to be bullish with July seasonality, expect the markets to grind higher. Here it is 3 weeks into the month, and we've grinded up to that 1448 zone. And we've been talking about this for quite some time. And sure enough, we reached the first target. How about that? Who could have guessed? Who could have thought? Who could have anticipated? Well, after the tariff talk and the pundits and everybody out there was saying it's a doom and gloom, it's going to cause inflation to go through the roof. It's the worst thing possible. It's horrible. It's terrible. Everything's awful. We got the recovery, and sure enough, we get 618, 786. We closed above here, way back here, weeks ago. When that baby closed above that 618, we had a 75% chance we're going there. How about that? And sure enough, weeks and weeks later, I even said I would not be surprised before by the end of June, if not sooner, we would reach that target. Bingo. Hit it like a heat-seeking missile. Now what? Well, I think we're still going to grind higher. I still think we're going to go a little bit higher. And do we get to this target? I like to see some sort of correction after this big move. I like to see a correction to then give us the blow off top toward the end of the year. But if this punch junk euphoria continues without a bigger correction, we haven't had a 618 retracement since this low. And if you really want to get to the meat and the potatoes, we haven't had a 618 retracement since 2009. So if you take the low and you go to any high along the way, no 618 retracement. This low to that high, no 618 retracement. This low to that high, no 618. This low to that high, no 618. Right? More like a 50% retracement. So if we start this over, no 618 there, no 618 there, no 618 there. Even here, we only got close, not even quite a 50% retracement. Huh. And then this one, no 618 retracement. Onward and upwards we go. And now we're up at this high currently. So why am I showing you a 618 retracement? Because when this bubble pattern, psychology of a market cycle plays out, we're going to get, Elizabeth, I'm coming to join you, honey. Is it the commercial real estate bubble that burst? Is it a fiat currency out there that fails? Is it World War III? Is it Powell resigning? Is it, we don't know. The housing market crumbles. What is it? Something's going to cause that, and we're going to get a 618 retracement. That's the Elizabeth, I'm coming to join you. Somewhere between a 618 and a 786 zone. So I made everybody else says a prediction. I predict this, I predict that. The weatherman, this person, the sports analysis, everybody gives a prediction. Well, I'll leave that to the prophets. And I made a statement that before we break 7,000, we're going to break 4,000. So eventually this could grind higher. Sure, I've been looking for a top and reversal about 6,600. I called that a long time ago. And we'll probably hit 6,600. Then before we break 7, we'll go down and break 4. Well, look who's down from the high to the low. And even if you drag this up towards 66, which is only a little bit higher, still below 4, and a 618 is right around below the Magic Fibo. So remember I said this, before we break 7, we're going to break 4, and we're at least going to retrace toward the Magic Fibo, which is still below 4. And I'm looking for a deeper retracement toward a 618 at least. If it gets real ugly, we'll go down toward that 786. But that's a beautiful psychology of a market cycle, bubble pattern. And when they pop, you typically come back down into the area of the plateau, which again is somewhere between this 618, 786 zone. So since 2009, we hadn't had one. So believe me, one is coming. And we're going to call it the Elizabeth, I'm coming to join you, honey, in honor of Fred G. Sanford. And Sanford said, Elizabeth, I'm coming to join you, honey. Here comes the big one. Well, we're not there yet, but be careful. It will be coming sooner than later, but no later than later. So what about the NASDAQ? Rinse and repeat, rinse and repeat. Off the recent high to low, right to that target. Remember, I said this weeks ago when we started closing above the 618 zone after that tariff talk. It's awful. We're going to zero. The world's going to end because Trump is playing God and he's doing these tariffs. Well, everything he's doing is good for this country, manufacturing back to this country, bringing $17 trillion in investments, AI, crypto, all the things that we should be the leaders in, shipbuilding, you name it, all coming back, which way, and even antibiotics. Believe it or not, after COVID, when we have to rely on an enemy like China to give us antibiotics to keep us alive and safe, go back and look at the war. I mean, there's some vicious things way back in Japan war. I've been looking at some of that on these channels and how they're going down and finding some of these World War II ships and they reenact the battles and talk about what went transpired. So believe me, we need to be self-sufficient on antibiotics and on goods and services and not rely on someone else to give it to us. All right, I digress, but we went right to our target. Rinse and repeat. Go back to the daily. Stretch that out. Here's that tariff talk low, V-shaped recovery. We broke above the 618 right in this zone. So way back in May, move my big red cursor, that green candle back in May when we made that low, talked about a good buying opportunity, and we came up here, we broke above the Magic Fibo, we closed above that 618 zone. So way back May the 12th, writing on the wall was we're going to 23.3. Where did we go? Right to it. Can't make this stuff up. Amen? Now what? I still think we're going to grind higher before we're done. My top and reversal for this was somewhere between 23 and 26,000. Kind of fine tune if we get that blow off top we're looking for, somewhere around this 25 to 26,000. But I would be remiss to not remind you to go back in history on a 3-day time frame. Go back to 2007. I know it takes a while to get back there, but this is important. 2007, we see this little pattern here where we kind of chopped around, popped to all-time highs, and then we had a big retracement to the Magic Fibo on a 3-day V-shaped recovery, and we went on to make all-time highs. And then what happened? The 2007 financial crisis, the real estate bubble burst, and the banks, etc., Lehman Brothers, everybody, all these things happened, which we never thought. And Goldman Sachs was saying, oh, keep buying, buy, while they were loading up puts. And we got a 57% decline after that. But this V-shaped recovery, if you take a snapshot of this move to where this chopped around, topped out, made a new high, came down, bounced off the Magic Fibo, and did a V-shaped recovery without a 618 retracement, same type of thing. And then what happened? Ouch. So I've been warning about that, and I'll put this over here so I can go back over here, do SPX side by side without changing it back and forth. But now look at this on a weekly chart and zoom this in. It looks eerily the same, but this time it's on a weekly chart. So we kind of grinded out, popped a new high, came down. Instead of a 3-day, we hit the weekly, and we got the V-shaped recovery without a 618 retracement, and we're going to all-time highs. If we don't get to my 66 target, which is the plan, then it's because of this pattern If we don't get a retracement sooner than later, and this thing keeps just grinding higher, maybe we don't quite reach the 66 target, and then we get the same thing that happened back in 2007. Boom. And it was ugly. I mean, by the time we went from 1500 plus, I mean, the numbers are way different, all the way to 600 and change, but that's a 57.5% decline. Well, what if we were to do that right now from current price action? What if we, and now we got to drag this up just a touch, but you can see we're actually a little bit higher than that now. But what if this is the end of the run and we get that 57% decline? That's 58, since I had to move that up. There's my 57% decline, and look at where we are. Move that out of the way. That puts us about 2,700, 2,700. Got it? Well, what does that do for us? You can go to your monthly chart, look at the same 2009 low, right? Up to the high, even if we just get a 57% decline like we did back in 2007, that moved down in 2007. If we just duplicate that, that puts us 618 retracement. Can't make this stuff up. Ian, it's right at it. James, even if it just duplicates that decline, we do it again from this nosebleed area where we are, that still puts us right around that 618 retracement. Wow. Interesting, isn't it? So look at that again. Off a 3-day, and even back in 2009, we got that retracement, but it hit the 3-day way back when. And every time I change time frame, it goes back. But it's very important that when we look at that, past at that time, 2007, we look at that. Looks eerily the same as we're seeing right now. Very much so. That's why it makes me nervous. When I saw the tariff talk low and was V-shaped recovery like in 2007, ouch. So that's what I'm talking about. Elizabeth, I'm coming to join you, honey, is inevitably going to play out. But in the short term, we reached our targets. ES, actually I already had, no, I did change it. ES again went right to our targets. Go to the daily, come back. Let me go back to the current price action, stretch that out, condense this back down, and we went right to our target. So what's next? We might be needing a little bit of a retracement here, but this punch junk euphoria is continuing. So the closer we get to the 6,600 target, the more and more nervous I get. And again, weeks and months ago, I was looking for a bigger retracement. We never got it. And we continuing to play out that pattern, which doesn't mean we have to go to 6,600. That's kind of the tone, but it fits even with this mold of recent high to tariff talk low. We broke the 618 to the upside way back in early May. And that said, we had a 75% chance we would go visit that target. We did. We still have a 70+% chance we're going to go visit in that target. But we still could have a correction before we get there. But the closer we get to that 6,600 level, which is before we break 7, we're going to break 4 statement. We're looking for the big one to come sooner than later, but no later than later. All right. What's next? Well, I wouldn't be surprised after this grind and grunt, get another little retracement. Right now, go to the lower time frames. And is this the end of the latest move? We got our move up, reach the target. And is this the beginning of another little 3-wave correction? and we're ready to go blasting off? Maybe, right? Maybe. Punch junk euphoria can continue. So you do the lower time frame, you can use the recent high to this recent low. And until we start breaking above 62.50 to 63.60, that's 62.50, 63.60. So here's your resistance zone. What if this punch junk euphoria continues and we go breaking above that zone? Then we have a 75% chance we start closing above 63.60 area. Then we have a 75% chance we're going to 63.80, 63.88. Well, the rule is we close above 6,300. We kind of got that little battle zone over here, right around the 6,300. If we can close above 63, even before we get to 63.60, right? Above 6,300, we got a great chance we're going to 63.80. But what if that's not a B, C type of thing and it's over? Well, that's why I want to force price to prove itself. So if you're more conservative, let it close above 63.60, shoot for those targets. You're more aggressive, then if it closes above 6,300, which is this battle zone over here, then we can still shoot for 63.80, maybe 63.88. Amen? All right, but force price to prove it. You go to a little bit higher time frame, like a 1 hour. Is that possible? Is it? Could be. We're bouncing off the 1 hour Magic Fibo, and if we get the measured bounce, then it sets the tone for some new highs. So I'm not convinced we have to break down lower, but up and until we break above this battle zone, then I can start focusing on all-time highs yet again and shooting for that target. NASDAQ, be careful with this one. This one is a little bit more interesting, especially if you go back to that 15-minute. This looks more like a 5 waiver than a 3 waiver, but is this over? Well, in order for us to start getting bullish, we have to go from the high to the low, and we got to start closing above 23.3, 23.358, right? The zone. So same rule. What if I'm scalping to go higher, expecting this to go up? Well, we got to take out that support zone. And knowing what we've done since this high, we've come and tested this zone. We've come and tested and tested. So I would want to see us break above that noise, test, test, test. I'd want to see us break above the top side of this to start targeting our extensions, which would be this 23.460 / 23.5. Got it? So this has to break above here before I start focusing on those targets. Otherwise, all of this could be the first, that could be the A, we get a B, and we still get a bigger correction down in C. So a lot of times these bounces, if they're over, then you want to see it take out this important zone to set the tone for some new highs. If this is part of like a 5 wave down, A, B, and then we get all of this move is just the bigger A. So maybe all of that move is just A. We rally into this resistance zone. We don't break it, get a big, beautiful correction. A, beautiful correction, ABC. How about that? A, beautiful correction. So if we can't go breaking above this and we start turning down, then we're likely going to make new lows down in this area. So how would I look at that? 3-point tool, right? Well, that's what we do. 1.2, 3.2. I mean, 2.2, 3-point. From that high to this low, say we rally up in here to test it and we fail. Then we're looking for A, B, C to at least come toward this 23, 22 area, maybe extend down to 22.8 zone. And this could be a beautiful A, E, terrible looking B. Let me do that again. It looks more like a heart on the side. Let me try that one more time. A. So I'm not saying this is definite just yet, but if this rally goes in here and fails, and that ends up being the AB, and we come down at least to this zone for my C, and might extend down to here for my C. What if we get that? Love it, right? Because seasonality going through July is bullish, but then starting August, we typically get a correction. So maybe this is the beginning of that correction going into August. And then from August to the end of the year, we get the Santa Claus rally, September, October, November type of thing. And we go busting out. And we shoot for what? Somewhere between 25 and 26,000. Off the scale up toward this 25, 26 zone. Any questions? So in closing, be careful. This may not be the end of the correction and a bounce and reversal. Until I see price close above 23,350, I know that's 150 points away. Until we see that, then we can be high probability. We're going to go up to 23,460, 23,5, highest probability. Otherwise, this could be A, B, C. And we got to move back down to 23, 22, 8 zone. What happens if we get down here and we're in August? After the seasonality says we typically get a little bit of a pullback, then we can look to go long again for that blow off top. All righty? All right. What about IWM? It's a struggling. It's a struggling. It's a struggling. And this is a way different picture. This goes back, I'll go back to the weekly and bring you back to 2001, 21. We topped out in this zone and we never made all-time highs like the Dow has, S&P 500 has, NASDAQ has over and over and over. And we have a lot of chopping, overlapping price action. So just like I made, not a prediction, but a statement, before we go breaking 260 and above, we're going to come down and break 160 and below. And that's what the market is screaming, right? So I do have an insurance policy with some puts down to this area. I did a put spread. And if this continues much higher, I'm going to close the put spread I sold for credit to lock in that profit, which will leave me with a long put for my protection. So there's many ways to start off with a put spread and then end up closing part of it so you're left with just long puts for protection to the downside, because I don't think this is going breaking out. I know it's going to go breaking lower in my humble opinion. So the only question is how much higher and how much more do we grind? The more we grind, it's making that portion of my put spread where I think I brought in, was it like $1? What did I tell you the other day? Let me pull up my account, see where it's standing. Yeah, I originally opened that spread out to September, and I was able to, at the time, get 55 cents credit, and it's sitting at 14 cents. So I got a sell order to get down to 10 cents. So if I can lock in from 55 to 45, 45 cents off of each contract, and then that'll leave me with just my long puts, so that if we get the big one coming down sooner, and this is ugly, a lot of overlapping chopping action, and we're retracing right into that danger zone. So this, on the shorter scale, this high to that low into that zone, what does that remind us of? A, B, C, right? Interesting, isn't it? And even if we just do a similar type of move, which you can use arrows or you can use scenario, take that high to this low, just this being the A, the B, and you do an equal and opposite move C, and we come down, it reaches my initial target below 160. Got to break this swing point low. So my statement was what? Before we go breaking 260 and break all-time highs up here, we're going to go breaking this all-important support zone right around that 160, 65, 160 area, and that would do it. We just do a duplicate move of this sell-off, retracement to this 618786 gets rejected, then we push equal and opposite move. But typically, when those will play out, you'll sometime expand it down toward a 1618. So that would put us well below that 165, down to about 145. So that is the plan. That's why I have these puts running. And what if they expire worthless because this just kind of chops and goes up a little bit more? Well, then I'm going to set it again for protection longer term, and I'll push, instead of September, I'll push this out to 2027. Give it plenty of time for that Elizabeth, I'm coming to join you, honey, to play out and start to set the tone. We're coming way down. Amen. All righty. So look at the difference between ES from that same 2021 correction over here, actually right there. From that, that was where the IWM and all those topped and then did a chop and never broke out to new highs, and even rallying into that. We got all-time highs, all-time highs, all-time highs. And look at IWM. It stopped way back and was chopping in the zone when we were just chopping here, and everybody else was all-time highs, over and 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 over. We didn't do it. We kept chopping. Biden came into the thing, and they were going to do that with the China, and it didn't happen. And then boom, it came right back down. So this price action is screaming this big arrow. So be careful. I would not be loading the boat long on this. I do have my short puts for protection. Instead of buying VIX or one of those, I decided to do IWM because this chart is screaming, down goes Frazier, down goes Frazier. Sooner than later, but no later than later. So again, if my protections expire worthless, it's just insurance on my portfolio. If it expires worthless in September, that's what it's for. It's insurance. I don't buy insurance on my house expecting it's going to burn down or it's going to fall apart or whatever catastrophic event, but it's good to have it if it does happen. Same thing here. And then what? This will eventually make that big move. So if it doesn't happen by September, then we'll look to redo it and push it out a few years as we expect this big reversal to happen sometime before the end of the year, maybe early 2026, and we get the big move down. So I'll probably push the next one out to 2027. That's kind of the plan. No buy, sell to hold. I can't tell you what to do, but I can tell you, disclaimer, I can tell you what I'm doing, and that's part of it. How about that? So any questions on the markets? We do have earnings. We've got the big, magnificent 7 coming out next week, most of them. Apple, Tesla's tomorrow, I believe. Let's see. Let me go to a daily chart. Should show me my earnings. Tesla is due tomorrow, but the rest of the Magnificent 7 is next week, like Amazon, Apple, Microsoft, Google, all those are next week. So we're about to get all the Mag 7 reportings. We shall see what it's going to happen. But tomorrow we'll talk about Tesla because it's after the close. But like I was saying early in the week, those of you, I'm very long Tesla long term, even though we know they're not making tons of cars, but robotics and the other things, they're robo taxis, et cetera, et cetera. We believe we're going to make that push up to 600 range. That's the next big run. The question is, do we rally into earnings? If so, we'll probably get a drop, which typically Tesla makes a move lower on earnings. More times than not, about 70% of the time, Tesla makes a move lower on earnings. Although recently, when earnings came out, we actually got a pop here. Then we got to move lower on that earnings. And the earnings before that, we actually got a pop. So up, down, and even with the negative one, we got a run higher. So I kind of look at this as, Emil, we keep rallying into earnings, which I like to see this rallying, even go breaking some new highs. If we keep rallying into it, we'll probably get a push lower on earnings. And if not, and we start dropping heavily into earnings, we might get a pop just to throw you off guard. But remember, I am big into TSLL, and I expect since these lows were up big already, we talked about loading the boat down here. When it broke 15, I was interested. And as the lower it went, the more I added. So I do have hundreds of shares of TSLL. And I'm looking for this to go ripping higher as Tesla runs into 5 to 600 range. This thing should go zipping much higher as well. And we still got a ways to go from the recent high to low. We got to get up above 25.30 before we start talking about 46.50, maybe $60 range. That's kind of what I'm thinking we're going to get to. If Tesla can get to 600, I see us getting close to 60, certainly the 46.50 range. Conversation will remind you as we go back to October of last year. And what did we say about TSLL in October? Expect Tesla to hit 500. Consider TSL trade in October 24th class. And what happened October 24th class with TSLL? October 24th class was right down at this low. Can't make this up. And we said, consider the trade. And it went from below $10 to $41.50. Not too shabby. Well, I think this is rinse and repeat yet again. Even though we hadn't officially broken out yet, well, we didn't break out when I called this over here in October, but it looked like it wanted to set up, and Tesla's going to make its run, and TSLL should make its run. So that's been in our class up here. Talked about consider TSLL. Quick way, if you're ever looking at this, well, Gary, there it is here. TSL reached the buy zone, and then the further it goes down, the lower it goes, buy more. At TSL, the lower it goes. Consider the CONL trade with Coinbase. Look at these. That was a few months ago, 5 months ago, 4 months ago, etc. So look at what's transpired since then. It's a thing of beauty. So TSLL, we got what we're looking for. We hadn't got the explosion yet, but it's coming. And then look at Coinbase. Actually, I can go over here into NinjaTrader. Yes, we have this available on NinjaTrader, but look at CONL. Got the beautiful move, went up to retest the high. So you were able to get in below 20 when we started talking about this, and it went up to 70, more than tripled. Again, I can't tell you what to do, but these are some great opportunities. Do I think this CONL trade is done and it's over? No, because I think Bitcoin's still going to make its push and break out, make a run toward that 150 to 175 is still the plan. So we'll probably get this push to go more. So 83.91 is still on my radar, and we reach 70, and we're pulling back to 61 now. If Bitcoin gives the deeper retracement before it can then go popping and make the next run, then this will probably pull back as well. But that was part of the plan. You look at Coinbase, we talked about that. We were going to go to that 400 plus, shooting for 480. We almost reached it. We're not quite done yet, but we're extending. Not only hit the 1448, the 1272, we're pushing toward the 1618. So what's the next upside target? Way up here about 600. So could we get there? Sure. When am I going to unload a lot of these stocks and ETFs and stuff you have? When Bitcoin hits its destination. That's when, but you can see these moves. Come over here, I got TSLL on here too. And remember the high, the low with all those critical support and resistance and our key Fibonacci levels. That's in there. It's in the software. You go under drawing tools, you go down to your MPA Fibonacci retracement or extension. So I got the 2.2, 3.2 already in the mix. So it's easy to do. Like you can see here, we have it on the chart, but I'll show you how you do it. You go into drawing tools, go down to Fibonacci retracement, MPA for market price anticipator. You go from the high down to the low, and you run your extension. All right. So we got a long way to go on this one. From the big time high to the low, got a long way to go. We got to start breaking above 2780 before we start talking 40 and 50 up here. So I'm not saying this is ready to go blasting off, but sometimes these 2x leverage don't always outperform, where we can have the underlying Tesla could go breaking some new highs, and maybe this thing underperformed. But when we were buying it at $6, even if it underperforms, it makes a move just toward the 618, 786 zone. How many of you would like to buy stock at $6 and sell it at 27 to 30 range? Well, if we get the big push and Tesla starts ripping to 500 and it starts pushing towards 600 and we start closing above this zone, then we have a 70%, 75% chance we can go to 46. 70 plus we'll go to 50 area. We're nowhere near there yet. But this thing took off the last time from 9 to, down here. We went from that scenario. It's way over here, obviously. But in October, we did that big move from here to 41, from below 10 to 41. So I'm still waiting for that big move to transpire. Is the big move to here? Is the big move to up there? We shall see. But I'm long TSLL, and basically all that money I made there used to buy. So this is the house's money. That's what I like to do. Get in trades, make a lot of profit, take that money, even some of that money to buy new. And then if this thing fizzles out and goes nowhere, I'm still on the house's money. But shooting for big things, even if this just gets to a 618 retracement. So clean all that up, high to low. Even if it just disappoints and goes to $27, $28 range, buying it at 6 or even 15, that's a double. So we did it before, we'll do it again. Got it? All righty. What else? Let's continue. Come over here to, well, let me finish up with any questions on where we think SPX, ES, etc. are headed. Come back over here. Let me put these back to where they were. ES for those trading futures. I'd definitely be taking profits since we reached our target zone. Probably due for a little retracement after that move. Yes, I think we're going to grind higher, but I would not be surprised to see a correction coming into maybe as we move toward August, and then we start blowing off top into the end of the year. And my next target up, since we reached the first one, is going to be up here at 65, 6,600. Kind of the plan, somewhere in this zone. So correction, last push into the end of the year. That's what we're thinking. Same thing for NASDAQ. We reached the target. Again, kind of zoom this in so you can see it. From the tariff talk low, horrible, horrible tariffs, we reached our target, 23.3, hit it right at it. Now we're looking for a correction. Why are we thinking correction? Go back over here to the software, and we can see the NASDAQ. My daily's overbought. We're starting to get a hook. We get a cross. If we get slope angle separation, we get a PAI hook, trend momentum cross. We get slope angle separation. That means the 4 hour is going to cycle down. And right now, my 4 hour is not cycling all the way down yet because we're right at that hook and a cross. So I would expect that we're probably going to grind lower. Love to see us come back all the way to the Magic Fibo to find support. That would be good. So remember what we were just showing a moment ago, that you go back to the NQ and we zoom in on that lower time frame and zoom out. What if this is, again, this rally doesn't hold and we can't break this resistance zone? So from the high to the low, Mr. Tucson, we can't break above 23.3, 23.358 zone, and we whimper out. Maybe this is the A, that's the B, and we get a C to come down in this zone. What happens if we get that ABC correction and my 4 hour cycle down, my daily is turning over to slingshot higher? Look to buy. Well, let's continue. What if not only the 4 hour finishes cycling, because my daily is going to end up hooking and crossing, but what about the weekly? Well, the weekly is extremely overbought. So maybe as we go into August, I'll be watching this. What if this weekly ends up hooking and crossing? Like we did there, we got a PAI hook, we got a trend momentum cross, we had steep slope, we had angle separation. And what happened during this? That was the tariff low, but my daily cycled down beautifully. From that high, went down, my daily cycled down, and even slingshotted lower once. That's beautiful. And a beautiful three-wave correction, and then boom. So what's next? Three-wave correction, and then boom, do we get up to that 24, 26,000? Yeah, that's what I'm thinking. But I'm watching that closely. If we get a weekly hook and a cross, I'll let the daily get oversold, look to buy the dip, and then shoot for the new targets. But I would not be going loading the boat long right here. Sure, Magnificent Seven, Tesla could help push a little bit higher, maybe next week when we get Amazon, Apple, and all those reporting. I think it's Wednesday and Thursday, or Tuesday and Wednesday, but it's next week nonetheless. I think it's the 30th and 31st, if memory serves right. So that would be Wednesday and Thursday. Most of the Magnificent Seven reports then. So if we can get surprises, we rally. What if we don't? Going into the end of the month, then we get some less than expected results. The markets could pull back into August because of poor earnings. We shall see. Usually it's a catalyst. But I would not be loading the boat up at this point, even though I do think we're going to go higher. We're just kind of screaming, we need a correction. And is this over? Maybe. If we do break above this zone, then by all means, look for 23.4, 23.5. But knowing we're going through July into August, where typically seasonality, we get a pullback, I would be a little bit more caution until we show price prove itself. So this could be the A, the B, and the C. Then moving into August-ish, we can buy that dip into the end of the year, and we'll look for the next blow off top. All right, so let's continue. What about black gold Texas tea? Starting to look a little bearish. It's been a grinding and a grunting, but it's starting to look a little bearish. Go out to the daily, and we had talked about this in great detail, that we're stuck between support and resistance until price proves otherwise. But we couldn't hold above the Magic Fibo. We're starting to break down. And if we start breaking below this swing point low, that's my 618, kind of sets the tone. We start closing below this, sets the tone. We're likely going to start pushing towards 50. But we do have this 60 target, which is part of my 6460, 618786, right? From the recent low to the recent high. There's my support zone, this green box. So if we can't hold support and start getting back above this swing point high, then we'll go up into this zone. So like I've been saying, I would not be surprised to see oil prices continue to chop sideways between support and resistance. Resistance up here between that 70-74 range, 70-75, and my support zone between the 65-60 zone. As long as that continues to hold, expect more sideways. But if we were to go breaking out, we close above 75, it's over. We're going to 80, 85, 90, between 90 and 100. If not, we break down below 60, we're going to 50, at least. That's the plan, technically speaking. So up and until then, we're stuck between pink and green, resistance and support. What are we most likely to do? Go sideways. But if we start closing below the 64 swing point, and this is part of that stair step higher and that big retracement, we start closing below that, then I think you can do a short-term short trade from 60 down, 64 down to about 60. We close below 60, then we got a big short-term down trade to below 50. Amen? Any questions on that? So be careful. We're between resistance and support. Just like I told you, when you're buying this, be sure you're in a position of authority, because I expect we would ping pong between this zone, and this could just continue where we just ping pong in here and we just go sideways. We do not have to break out and we do not have to break down, but the technical picture is pretty clear. We close above here, we're going higher. We close below there, we're going lower. In the interim, ping pong, bounce, bounce up in this zone. But watch this swing point low there. We close below it, we're likely going to go test this $60 range. We break that, then I think we're going to 50 and below. Got it? Otherwise, we bounce, get back above the Magic Fibo. We start breaking that swing point to the upside. We got a swing point to the downside, a swing point to the upside. If we get bullish and we start closing above the Magic Fibo and we close above that swing point, then likely we're going to go test that 70 to 75 zone. We could test this zone and still get rejected, come back down and keep testing that scenario. So that's why you got to be very careful. When you're in it, you take aggressive profits. Until we break below 60, then we can loosen the rein to go down to 50, or we break above 75, we can loosen the rein down to 80, 82, 87. But I think that's onward and upwards toward that 90 to 100. In the interim, stuck. Quicksand. So how do I trade it? Go to the software. Go to WTI, crude. And I'm still a little bit more, at the time, we're still below the Magic Fibo on a daily. So you got to be a little bit more bearish at the moment. And that's the daily just kind of cycle down, turning over, still pushing lower. So I can't be real bullish at the moment, being below the Magic Fibo and pushing lower. but my daily turns down and it hooks back up. Could I buy that and scalp up? Sure. That's part of the plan. And then I would be in a position of authority if I do that. So I'd look for this to turn, get a PAI hook. I would buy it and then take aggressive profits, be in a position of authority in case the daily wants to turn over and slingshot lower. But if we break that swing point low down here, look for more downside. If we break the $60 range, look for a lot more downside. Fair enough? But one would be a nice little buying opportunity. If I'm just want to scalp, I like to see the daily finish this down and then turn up. Maybe we drift a little bit lower toward that battle zone and we find support as this is turning and hooking up, buy the bounce and get to a position of authority. How about that? All righty then. Let's continue. What about gold? Gold is bouncing again. Are we going to get this breakout? I really wanted to see another push lower. If we can get a close today, right? If we can close today, which is a big if, still got a lot of hours to go, then we can start shooting for 34.80, 35. If we get that close today. If not, and we close back below, I still would like to see a deeper correction. This is a lot of overlapping. This could run and make you think it's going to break out and still do this. So I haven't given up on this downside move, but price proves otherwise. We must close above this zone today. And if we do, then I look for this to continue toward 34.80, 3,500. Amen? Any questions on that? Silver? I thought silver would give us a pullback as well. If gold did, well, gold's not doing it. Maybe silver's breaking out, getting one last little push, then we get it. So I'm still a little cautious about the run, not long term, just short term. Short term, we've been talking about buying SLV down here. We talked about it going long. If we get another pullback, I have resting orders if we get it. Otherwise, the reason I think we're likely going to get some sort of pullback, we reached the 1618 extension from the recent high to low. We reached not only the 1448, 1272, we went on to the 1618. And this is typical when you do this. You go up, you reach a target, comes back to retest. Then it goes breaking out. But at some point, we do need a retracement back toward the Magic Fibo. We've done it before on these moves from that high to this low, went up toward the 1272, 127, almost toward the 1618, came back toward the Magic Fibo. So be careful. I'm extremely bullish silver, don't get me wrong. With quantum computers, AI, drones, all of those things that use silver. Silver is a finite commodity, and we have just a huge demand coming. That's why I know silver is going to go to the moon, Alice. Literally, Ralph Cramden, to the moon, Alice. Yes, no doubt. But we're already reaching those extensions, and typically you get some sort of pullback. And this looks like a big 5-wave up. And reaching the extensions is begging for that 3-wave correction. Right? So I'm not saying you shouldn't own SLV. I do. But I'm saying we likely going to get some sort of retracement before this thing just keeps going straight up. Big picture. Everybody wants to know a bigger picture. Well, we come back to this recent high to the low, and we're definitely, my humble opinion, no ifs, no buts, no ands, no exception. We're going to 60, 70. Done. Is this right now from 35 going straight up there? It's possible, but extremely unlikely. But is this target possible? It is a done deal. There are no guarantees. No buy, sell, the whole recommendation, no guarantee. But this technical picture, in my humble opinion, with quantum computers, drones, AI, all the things that are just using a ton of silver, being a finite supply of silver, boom, supply and demand. Huge demand, limited supply, price goes skyrocketing. This is the tip of the iceberg. But we're definitely reached 60, 70. But be careful, drill down to the daily and the latest little high to low. We're reaching that 1618 extension. We typically need a pullback. So it's not to say this thing can't just keep going. Maybe it goes up to 38 to 272, 40 to 2618, maybe. Lower and lower probability it just keeps going straight up without a correction, especially after we had a big 5 wave up, got a correction, 5 wave up, we're due for another correction. So I'll zoom that in for you. This is getting in danger zone of a correction, and I'm going to show you on the software as well. But that looks like a 1, 2, 3, 4, finishing the 5. And then what? Likely get a 3-wave correction. I'd love, and I know this is sloping upwards, I'd love to see this come back toward the Magic Fibo to then set the tone for the next big run toward that $60, $70 range. All right, come over here. Do I have my silver in this one? Yes. Have my silver. Got in silver a long time ago when it was down around 22 and took profit 1 in a battle zone, took profit 2, and I'm looking for take profit 3 up here. So even though I'm telling you, could we get to this target first before we get that 3-wave correction? Maybe. This is just a longer term trade, but notice that when it hit take profit 1, it moved the stop loss and the profit. So, well, Gary, why you got your stop loss way down here? Well, I just hadn't fooled with it. It's on-screen programming, so I can move this up. But I am looking, now we're in bigger profit, and we're already bank profit. So I'm looking for this to continue to play out, up 1,650 pips on silver. That's a beautiful move. But notice the monthlies extreme overbought, the weeklies at extreme overbought, the dailies at extreme overbought. So that's why I'm telling you, we're probably going to get the correction. And when you start looking at a 5-wave type of move, that's finishing a subdividing 1, 2, 3, 4, 5. So 1, 2, 3, correction. And another subdividing 5-wave, 1, 2, 3, 4, 5. 5 of 5 is screaming a correction, my friends. So I'm going to let this run. That's why I don't want to run the stop loss. Now I can keep moving it. I can keep moving on-screen program. Now we're up about almost $9 in the profit on that big move. But I'm expecting this to come down in a correction. So I don't want to go too tight because I want to keep this running to finish this trade out higher. And I could really lift this to 60 to 70, but rinse and repeat, you get the point. But it's all on-screen programming. And when a weekly, monthly, and daily are all getting extreme, doesn't mean price has to come down, but the likelihood you're going to get a correction in here after that 5-wave and subdividing 5-wave, man, this thing looks like it's getting ready. So if you're in silver and you hadn't taken any profits and you're worried about a pullback, then by all means take some profits like we have. Otherwise, I'm looking for another opportunity for silver to do its thing, and that is get a 3-wave correction in here to load the boat again and shoot for 60, 70. And last but not least, if you look at gold back since that same 2021, 2011, so let me go out to my weekly chart, should do it. The previous high in 2011 to the low, we went all-time highs and we kept going. We reached the 1272, the 1618, the 272, exceeded the 2618. Look at silver. You do the same thing. Silver is still stuck in the 618786 zone, testing the upper end of it. But imagine, Emil, James, Harold, imagine silver starts to catch up with gold and starts pushing toward that 2618. You're talking $500. What? Well, like I said, they're going to use a ton of silver in quantum computers, robots, drones, AI, all the things they're doing, and it's a finite thing. That's why when I talk 60, 70 is extremely conservative, and I can boldly say no ifs, no buts, no ands. We're going 60, 70. But I'm looking for the correction to buy the dip, add more to these, or buy silver bars, whatever you want to do. Don't care. Going up there, I mean, I care, I want you to do well, but it doesn't matter. You buy silver bars and then melt them down later and tell them I will sell it later, whatever you got to do. But it's a investment that will not and cannot go wrong for a long time. And if it just catches up with gold, we're talking a 10x from where we are. Wow. Amen. All right. Last but not least, let's close it down. Bitcoin, we know the story. Every 4 years, you get a halving. Every post halving, which is the blue line, we run up for 12 to 18 months. Then we get a crypto winter. Anybody watch Game of Thrones? The winter's coming. Well, crypto winter comes, and then you buy low. You get the next halving. Then you get the 12 to 18 month run. Then you get the crypto winter low. You start buying there through the halving 12 to 18 months later. So we know this is rinse and repeat. We get the highs in 17, 21. We're going to get a high in 25. And then we got the lows in 18, 22. And we're going to expect the low in 26. We know that story, right? So the way to make a lot of money in crypto is to buy during the crypto winter low when everybody's calling it a scam. It's worthless. Just like I did for you back in 22 when I said Bitcoin below 20,000 was a steal. It was really committing a crime buying it below 20,000. And look at it now. Huh. So we could rinse and repeat every 4 years. So the next opportunity, once this run is over, we're going to buy in late 2026. And depending on where we finally top out, I'm looking for Bitcoin to go below 50,000, somewhere 50 to 30 range. We'll give you fine-tuned targets later, but I will make the statement, Harold, if in 2026 at any point Bitcoin dips below 50,000, you better be buying it like it dipped below 20 in 2022. Because we get it below 50,000, not to say it's definitely without a doubt, bet your life it's going to go 50,000 or lower. We shall see, but I'm just making a statement, not a prediction, that if any time below 50,000, you should be buying Bitcoin or a derivative thereof, like iBit, etc., etc., etc. You can buy it any way you want, but get involved. And then in 2026 late, we're going to buy it then, hold it till late 2029. Next halving is in 2028, 12 to 18 months later, puts us in late 2029. Now, focusing on current price action. Are we going to continue the breakout or we need another little correction? Well, Bitcoin's got to prove itself, but from the recent high, let me zoom this in so everybody can see it. I know there are a million lines on this chart, but that's what we do. And I expect we'd probably get another push lower, but maybe not. So let me move this out of the way, get some of the lines off. Here's a recent high to low. I'm going to remove some of these so I can put a new one. I'll remove this guy. Just get all the current price action so we can look at it straight up. Take all of that off. And most recently, we had this high and we have this low so far right there. And until Bitcoin starts to break above 124.80 to this 121.700, this green box, that's my 786, 618, 786 zone. Well, what happens? Like I told you when we broke out before, we'd go up to 120 to 130. We went to 123-ish. Not too bad. Well, if we start breaking out again, my immediate targets are going to be this 124.5, 125.4, 128. But I think this momentum is going to push it at least toward the upper end of this 128 to 130 range. So could this be another correction and then the last blow off top into the end of the year? Or maybe this next run, we just keep going. But the plan is still to get up here that 150 to 175. Amen? So be careful. This could turn out to be, like we've been talking about in a lot of these, this first down move is my A. This chopping overlapping ends up being a B, and we can't break out to go higher. We test it and fail, and then we come down in C, and maybe we come back down toward maybe 112-ish, or where we broke out from, 111-ish. So I'm not saying I guarantee we're going to fail and go down, but all I can say is if that happens, load up on some IBIT, load up on some other things, because then when this baby does go breaking out and soaring toward the 130, 150, 170 targets, those are doing well. And just to show you what IBIT's doing, I have a call option on IBIT that I bought out to, I think it was the $80 call option out of the money. Let me see, for a low price. IBIT, pull it up. Yep. Was able to fill yesterday on that pullback at $1.15, and that is the September 80 calls. So I'm already in that, looking for this to go by September, this thing to go breaking out. But what happens if I'm already up in the money now? It was at 115, it's trading at like 138 right now. So I'm up a little bit of cash. But what if this thing would have pushed lower and Bitcoin gives us that ABC correction and IBIT does the same? I'll just add more to my position and let it go higher. So that's the plan for IBIT to go blasting off. And I bought 80 calls, which are way up here, right? We're only at 67, but that's why I was able to get in for only $1.15 at that little swing point low. So I'm not saying you missed it, but if I buy one now and we do get a pullback, I'll just add to my position. And I'd love to see it pull back and buy more and add to my position. Do cost amortization, but I think by September, we're going to get Bitcoin to go surging. And by the end of the year, which would put us into September, October, a little bit later than, early part, it could go to October, but I think this will pay out big, hint, 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 that this will pay out big because I think this IBIT's going to go soaring when Bitcoin does its next push. And look at the low in April. It was down at 43. We're sitting at 67. Let me get the date of that. That was roughly beginning of April 7th-ish. And where was Bitcoin in April? Right down here at 73. So Bitcoin ran from 73 to 119. And IBIT made its move. Off of that move, made its move from 40 to 67. Not too shabby, right? So I'm looking for more upside. And from the recent high to low, we already reached our initial target. Just looking at this high to low, yes, I think 73 is a high probability. And I think we're going to go up into the 80s. That's the plan. That even if we get the dip by September, we'll at least be in the 80s, which puts us out of the money call option well into the money. And this thing could be up here in 100. If Bitcoin goes breaking 130 and starts shoving and pushing toward that 150 to 170 by September, this thing should be in the 100 plus, in my humble opinion, of course. All right. And ETHU, it started to Ethereum. It's been on a big tear. Wouldn't be surprised to get a little bit of a correction. But look at what we got, ladies and gentlemen. Harold, we're finally there, my friend. We are there. From the recent high to the recent low, we took out the 618. We took out the 786. So what is that screaming? Yes, Ethereum is headed to 45, 70 plus percent. We're going to 48, 4,500, 4,800. And yes, after this big run, wouldn't be surprised to see a little bit of a pullback. But when Bitcoin runs and makes that 150 to 175 run, I'm going to sell my Ethereum. And remember, we talked about ETHU, talk about sitting pretty. Al, what did I say the other day? When Ethereum starts to break out, if it's going to run back to 4,000 and we're sitting at 3,700, we should at least test the 618. And we're not quite there yet, but we're awfully close to that target. We're sitting at 120. Just the other day, we were down here, and not too long ago in April, we were sitting below 26 after the splits. But even if you did the splits, which I don't like, obviously you have much less shares. They're worth a lot more. So for every 100 shares you have, you had 5, and I had hundreds and hundreds and hundreds and hundreds. So I don't have hundreds and hundreds more, but I still got a bunch. And even though the price is different now, when it was buying it at $4 before and went up to 12, and then we got this scenario, I said I'm still holding on to my ETHU. And even after the splits, we went down from hundreds to numerous still, 5 per 100, and I had numerous hundreds. So I don't have hundreds anymore, but I do have enough. That price is now at 120. I'm well in the profit after taking what? We had that gap down. We had the market fill. We went up to like $16 or whatever it was, from like $4 to $12. Made profits. I took that money and used that money to buy them again. And now I'm well in the profit again. And even if this thing is a dud, I said it should at least test the 160 to 200 range. And Ethereum, going back to what we just discussed, we're closing above that 786 already. So that says we should not only go back to 4,000, we're likely going to go to 48, 45 to 48, maybe 5,000. What if Ethereum does that? Right? Get a little bit of a pullback. We get the last pop, and we go up here to say 48 to 5,000 range. That should put our ETHU not only at least 160 to 200, it might go breaking out to 280 to 300. Sometimes these leverage products underperform. You see that a lot. Where Ethereum goes to all-time highs, yes, this could be at all-time highs, but even if it underperforms, it typically will give you a 618786. And knowing that, I'm all about it because I'm well in the profit on the house's money right now. I could close this and be extremely happy, but I don't think it's over yet. And looking at Ethereum, it's likely 75% chance going to 4,500. And that means we're going to break above the 4,000, which my statement was, we go back to 4,000. I think we're at least going to test this battle zone area. And we're not quite there yet, but man, we're awfully close. Right? A lot better than we were over here not too long ago, beginning of the month or late June. So look at that. Beauty. Got it? So when am I going to unload all my ETHU, my Ethereum, my Bitcoin? Unless you own a lot of Bitcoin, you just hold it until it gets to $1 million, which it will. My humble opinion, Bitcoin will reach $1 million one day. So if you have those and you're just holding it, fine, but just be prepared. Crypto winter's coming, and Bitcoin could go from 150 down to 50. If you can sustain that kind of volatility, by all means, do it. But I like to buy low, crypto winter low, sell high, bring in all that money to then buy low, sell high, and then do it again, buy low, sell high every 4 years. So in closing, I'm happy with this trade. We talked about it. It went much higher. The CONL, you should be very happy with. We talked about that going very high. I don't think it's over. And we talked about the TSLL. That one's a little bit more boring as of late, but Tesla hadn't ripped the 500, 600 range where, in my humble opinion, I think it's going. By owning shares, I don't have to worry about the expiration date as much, right? Obviously. So that's why you should keep that in mind, that these are going to go much higher. So circle the wagons. A little winded today, but be careful. We talked about the dollar index, just real briefly. Dollar index, I said would come down to this magical zone. Look at it. As we speak, let me go back down and stretch this out. Get this the current price action. As we speak, Harold, I took all those off. From the low to the high, I expected this would go down and test this zone. Look at it now. It went lower. Euro pound went higher, but I'm not convinced that this is going to go breaking any new lows. I want to see if it holds this zone. If it does, we'll probably get this A, B, C to play out. And then when the daily finishes the up cycle, we're going to sell it, look for some new lows. If I'm wrong and we start closing below 96.90, then we'll start targeting 95 or 96, then 95.70. Otherwise, this holds and bounces. Then we're going to look for this to make a run toward that 100/101 and the next wave up, which looks like an ABC. Then we get the big move lower. All right. So that's why I play this game in and out every day. Highest probability. We close below 96.90. We're going to 96, 95.70. We hold it. Then we start closing above 98 up here. We're going where? 100, 101. And that's where I thought we would actually do. This baby will go up here and test the Magic Fibo to then fail. But you got the plan. If it doesn't, we know where we're going if we close below 96.90. ES, etc. I think we're due for a correction because we reached the extensions. We went right to the all-time high, down to the tariff talk low, doom and gloom, and we went right to the 1448 when we closed above that 618. So that strategy is a beautiful thing. I am what you call a retracement trend trader, pullback retracement, right? You wait for the pullback retracement, then you use your extension. So pullback trend trader. And that's what I love about these. And that's where the 618, 1448, 1272, all these targets come from. Amen. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. That's it. That's all. We'll see you tomorrow.